Hello everyone, my name is Tina Mathur and I am assistant professor in Biani Girls College. Today I am going to deliver a lecture on the topic working capital management. Working capital is that capital that circulates very frequently from one form to another. Working means circulation of capital on day-to-day operating activities, and capital means assets we have invested in business. Now, working capital is that capital that transform from one form to another. Now, let us start. First we purchase raw material, then it converts into work in progress, then finally it converts into finished goods, and from finished goods it ultimately converts into sales. And sales can be of two types, one is credit sales and the second one is cash sales. And from the credit sales it converts to debtors, and debtors finally convert into cash. This is operating cycle. Now, let us discuss about the various methods of working capital requirement. First is operating cycle method, second is net forecasting method, third is projected balance sheet, next is percentage of sales method, and the last one is regression analysis method. Most commonly used methods are operating cycle method and net forecasting method. Operating cycle method is that cycle that when we start from purchasing of raw material and it ends till conversion of sales into cash. Then net forecasting method in which we take forecasted assets and liabilities, and net forecasting method is that method in which we take or we estimate current assets and current liabilities, and working capital is current assets minus current liabilities. So, we will start with the first method of working capital requirements, that is operating cycle method. So, it starts with the step 1 in which we calculate operating cycle period, which includes raw material storage period, conversion period which is work in progress period, then finished goods storage periods, then debtor collection period, that how many time or how many days it takes to convert credit sales into cash, then creditors payment period. So, we plus work in progress, finished goods, debtor collection period, and from that we subtract creditors payment period and we get the operating cycle period. And the second step is the calculation of number of cycles in a year, that is 365 divided by operating cycle. And next is calculation of working capital, which means operating expenses or cost of goods sold divided by number of operating cycle that we have calculated in the step 2. And this operating cycle that we have calculated in step 1, that is operating cycle period. And the step 4th is provision for contingency, because we do not know what will happen in the future. That is why we add some provision for contingency, which can be 5% or 10% as per requirement or as given in the question. Now, let us come to the calculation part. To calculate raw material storage period, we will take average stock of raw material divided by raw material consumed into 365 days in a year divided by 12. And to calculate work in progress storage period, average stock of work in progress divided by annual factory cost into 365 by 12. And to calculate finished goods storage period, our formula will be average stock of finished goods divided by cost of goods sold into 365 by 12. Now, to calculate debtors collection period, we will take average receivables divided by net credit sales into 365 by 12. And for the calculation of creditors payment period, we will calculate it by taking average payables divided by net credit purchase into 365 by 12. And to calculate cost of sale, we will take cost of goods sold plus administrative expenses, selling expenses and distribution expenses. Now, to calculate raw material consumed, we will take opening stock of raw material and then we will add purchases in that, and then we will add carriages inward, and then we will subtract closing stock of raw material, and finally we will get raw material consumed. And in raw material consumed, first we will add factory expenses related to production, then we will add opening stock of conversion period or work in progress minus closing stock of work in progress, then we will get annual factory cost, and from that we will add excise duty, we will add opening stock of finished goods, and we will subtract closing stock of finished goods, and finally we will get cost of goods. Thanks for watching this video. Please like, comment, share, and don't forget to subscribe our YouTube channel and visit our website gurukpo.com.